Good morning, traders. Welcome to the Das Trader Morning Call video for Thursday, December 17th. Well, the anticipated rate increase is over. Janet Yellen increased rates by 25 basis points, and so the uncertainty is sort of out of the market, right? So now where do we go from here? Well, we did have a little bit of chopping around, backing and filling yesterday, and we're going to see if this market is going to hold these areas here. If not, then I would suspect that we would roll over. Usually we get some sort of a reversal from what the Fed does, what the market does during the Fed announcement. So in this case, we might get a little bit of a move lower. Not the case, not happening at the moment. We're up nicely in the pre-market, so we could be moving higher. And that tells me that we could be having that bull flag breakout that we were looking at, right? Remember, we mentioned we had two patterns. We had an M-top formation, which is bearish, and we had a bull flag that looked like that was forming, which is bullish. Now, we haven't broken out of either, so right now we're still within a range here. But let's see what happens the next couple of days. Also, rate increases affect a lot of different asset classes, the dollar, gold, crude oil, commodities, right? So we need to pay attention to what's going on. Yesterday, we didn't really have much of any type of movement in gold, and that's really shocking to me. And then this morning, we see that gold is down $15. Why? There's really no reason to hold gold at the moment until we get some sort of a massive pullback or some sort of fear in the markets. Then I think you'll get that run into gold. I also mentioned about gold looking at that 980-ish area in the GC contract, the futures contract, and then $98 in GLD. I want to show that to you right now. Let's go right into it. Here comes the UUP, the ETF, the dollar ETF. Beautiful big bull flag here. You can see the flagpole, the flag. Broke out of it. Now we have this beautiful bullish fallen wedge. We broke out of that as well. Seasonality, strength in the UUP, which is the dollar, goes up until February, mid-February. So keep that in mind. If you're buying commodities, I think you see lower prices, at least in the short term. So I think you could pick up, and I'll give you an example. Let's take a look at, let me just get out of the way here. Look at the GLD. I think you break the 100 par. You'll see a lot of stops below that 100, guys. Flush down to that 98 area, and I think that's where you start looking to pick up or average into a gold trade. All right, not here, not yet. There's still plenty of room to the downside. Take a look at USO. Same goes for USO. We're trading at 10.90. A couple emails, Mark. I think the bottom's in here. It's $11.50. 2 days does not make a trend. We need a good base building, at least 3 to 5 days. We haven't had that yet. I do think with dollar strength, you're going to see a break below $11, and in the 10 area, 10-ish, where the market, where USO will stop. Crude oil as well. I think you see 32, 34-ish. You could start nibbling into a long trade in crude oil. Okay, now let's take a look at the indexes. And you see, I mentioned this here. We had an M formation. You can see that left side, right? Here's that midline, and then that rollover, that lower high from this previous left shoulder. So there's M-top formation, which is bearish. We did break, but we never closed, right? But look what's happening. Looks like we have a possible bull flag here at these highs. If we break out, we could take out the highs going into the end of the year. We have about 2.5 weeks, maybe a little less than 2.5 weeks. And believe me, guys, right now, seasonality is the Santa Claus rally time of the year, meaning that we do have a real big bullish bias, which kind of started on Tuesday. And with the monthly options expiration, it's also have a bullish bias. I would not doubt that we break out and at least challenge or make new highs going into the end of the year. The beginning of the year now, January, February of 2016, is a whole different ball game. As you know, we do have some major market divergence. Here's the IYT, the ETF for the transportation sector, not even close to challenging the highs. This is our leader, deemed our leader, guys, and it's breaking down. Now, we could back test this lower trend line area and then fail again. And by the time I mean back test, the next couple of weeks, we come in, we hover around here, maybe get into this symmetrical apex of the triangle and then break down again into January and February. Market divergence, it does last a long time. It's been like this way for a whole year, but at one point in time, it will start to kick in again, all right? So be very careful for those of you who are trading in a long side and are a longer-term picture here. IWM Russell 2000, great gauge of risk. Same situation here, guys. Remember, seasonality-wise, Russell does shine, and I think that if you watch the Russell and if we start to really break out to the upside with the Russell, that'll at least help that Santa Claus rally going into the end of the year. Take a look at the diamonds. Is a lagging index. Was leading, as you know, in October, and now we're just kind of fading away here, chopping around. break out of here, guys, again, we'll start to challenge these highs from 2014. All right, guys, I hope it really helps. These videos really want to get you on the right side of the trade for the day. Lastly, the Qs. You can see that M formation yet again. We did not break out at all. We did fill the gap here, and now we're looking to challenge the highs. I think if this thing does happen and we break out, then again, guys, I think we get that Santa Claus rally. If not, then we're just going to chop around here for the last 2 weeks. Not sure, but again, guys, let the market tell us what direction it wants to go, and then we just follow the trend, okay? Have a great day. We'll speak to you tomorrow. Take care.